Welcome back to another Market Open live stream, guys. Hope you had a good weekend. The market is doing some crazy things, and we're going to go over all of it because, I mean, it's Monday. So we want to know where we can make the money, where we can pass the prop firm challenges, and all of that good stuff. So I am going to pull up TradingView. We're going to see what's going on in the market and where the opportunities are. So, Bitcoin, our beloved Bitcoin, is rallying. Stocks are rallying a little bit of bipolar action over the last week or so. So, I want to go over exactly what is happening. So, let's pull up the Pip Munch email for the day. This guy right here. Happy Diwali, Skiller. Happy to have you here. Hope you're having a great day. Don't work too hard today. Okay. So I want to go over everything that's going on. So the market's rallying. Gold sneezed. Bitcoin sleeps. Gold had an awful drop on Friday. This stock just hit a 5.5-year low. We need to talk about this guy right here. The U.S. economy is running on AI fumes. There's this really interesting report that showed that, when you remove all the data centers that have been built for AI, when you remove that from GDP growth in the U.S., it's not looking good. So if any AI growth stalls, lags, the US economy is running on fumes. Are Russia and Elon Musk running or building a tunnel together? We'll take a look at that. And these universities produce the most billionaires. So last week was pretty rocky, but Friday's numbers ended pretty solid to end the week. S&P up 0.5, NASDAQ 0.52, 0.52 for the Dow, and 108,556 for Bitcoin, but it's rallied another 2% just today alone. So we're going to pull up the charts and see how that is going. If you guys are here, I appreciate it. So stocks bounced back barely. We can see here the Finviz heat map. It was a small rise, but across the board, there's tons of green. You could see here Tesla 2.46, Google and Meta, small little gains there. Financials got hurt a lot last week because of some smaller regional banks. They're really struggling. So they had a little bit of a comeback on Friday. So why did all of this happen? We always have to ask ourselves, okay, why did the market move the way that it did? And the answer to that, we then have to ask ourselves, is that going to continue or is that going to change? That's how we come up with our big trade idea, our thesis for where the market is headed. So why the rebound? Trade vibes improved. Reports suggested progress in U.S.-China negotiations. Europe's weak exports calmed inflation fears. So that flipped the switch to risk on. And again, as always, tech carried the squad. NVIDIA was up, Microsoft, Apple. And these companies are so massive. It's not really the S&P 500 anymore. It's like the S&P 7. If these companies are rallying, it's going to bring up the entire index. Moving forward, Tesla reports Wednesday. So overall, we're in this really rocky scenario where, we're at all-time highs, but the economy is starting to show some cracks. But interest rates are still high at like 4%. So the Fed's going to cut. So has the market already front run that move of lower interest rates? Or, it's just we're really in this sideways consolidation period where the market doesn't have enough info, enough data on whether or not we want to go back to all-time highs, if we want to exceed all-time highs, or if, things are going to get a little bit rockier, which we're going to see down below based on that GDP report that came out. So momentum overall is still fragile, but the market is showing resilience near all-time highs. So that's kind of what's going on here. So you got to keep your eye on U.S.-China negotiations, the weak data from Europe, but really it's just the government shutdown still ongoing. There's a lot of sort of things back and forth. Israel didn't respect the ceasefire, so it's a whole mess. There's a lot of stuff going on. Before we take a look at gold, let's take a look at Bitcoin. Ashley, appreciate the question. If you guys have any questions, drop them down below. What does this mean for crypto? Crypto is the most volatile asset there is. So, for example, when the market rallies, you're going to see if the Dow Jones, just for numbers' sake, if the Dow Jones rallies 1%, the S&P typically will rally 1.5%, and if the S&P rallies 1.5%, the Nasdaq will rally 2%. Now, that's not a perfect one-to-one correlation, but it's because tech in the Nasdaq is more volatile. The Dow Jones being just 30 blue chip companies, much steadier, and the S&P is right in the middle. So if you take that level of thinking, you then apply it to crypto, and above Nasdaq in terms of volatility would be crypto. So you have Bitcoin, which would be sort of the least volatile, right? And then everything else would be on top of that. So if your thesis is, stocks are going to rally, well then crypto's going to rally. If stocks are going to hurt, crypto's going to hurt even more. So crypto is a leveraged play on the overall market. And so that's why, as an example, not to go down the rabbit hole, but that's why if you're bullish on Bitcoin, you would by extension be bullish on Coinbase. So I'm very bullish on Bitcoin long term, but I bought in April a bunch of Coinbase, which has now rallied over 100%. My position's up over 100%. Because yes, Coinbase is a solid company, but if Bitcoin rallies, which is my thesis, Coinbase is going to benefit from that as well. So really, all that to say, everything that's going on, if you're interested in crypto, it's just going to be crypto is going to be a more volatile play, both to the upside and to the downside. So if we look at the market, what's going on now, you can see we're right back. It's crazy. We're so close to all-time highs. We dropped 3.8% when Trump had that tweet about trade war and whatnot. We've rallied up, and now we're only 0.7% from all-time highs. It's crazy. The market only goes up until it doesn't. So I don't know if we're gonna. I mean, nobody knows if we're gonna massively exceed this all-time high. If there's a bunch of sell orders here and it's gonna drop. I just think the market is really waiting for some more data. We're kind of in this wait and see period. For me, I would drop down timeframes a little bit, just trade what's in front of me rather than having this long-term idea. I mean, for me, Bitcoin is a long-term idea, right? Long time horizon. I'm not trading Bitcoin. I'm just holding it long term. So really, really interesting to see how the S&P is back up. Even the Nasdaq here. This is the CAD equivalent, or the Nasdaq denominated in the CAD. We're right back. It's so crazy how nothing. The taco trade always pays. The taco trade is like the best trade you could have taken this year. Trump always chickens out if you're not familiar with the taco trade. So absolutely, absolutely wild. So moving on to gold. Gold also had a moment on Friday where it dropped total from the high. It dropped about 4%, which was billions of dollars because the market cap is now massive. I think it's the first commodity or first asset. It was like 31 trillion or 39 trillion, just insane. Spoke about that last week. So, what actually happened before we get into the rally? What happened is the gold top in. So, on Friday, Twitter had a little bit of a meltdown saying gold lost $1 trillion in market cap, but that was not accurate. That did not actually happen. So, gold hit a record of 43.78, then pulled back 2 to 3%, closing around at 42.10, 42.50. The sell-off was sparked by Trump softening his tone on China's trade war, again, the taco trade, cooling the safe haven fever that's driven gold's 60% year-to-date rally. Everybody loves to freak out when an asset that has done so well starts to drop, but it's still up 60% year-to-date. So people just have to realize that profit taking is part of the game. And I mean, use it to your advantage. So literally right here, traders took some profits, not the end of the world. Every rally needs a breather, and this one's still alive. Gold fundamentals, same as Bitcoin. Weak dollar, worst year for the dollar since like 1970. Rate cuts are coming and ongoing geopolitical chaos. So it's a very, very simple trade. It's been the easiest trade all year. You buy gold, you stay into it, and that's that. So it's not so much about thinking about a top, but more like gold just checking its reflection before another leg higher. So in terms of trades, I mean, it's been very, from a technical standpoint, it's been very difficult. This has been a fundamental trade the entire way. But even then, we had the first pullback to the 38 fib in a long time. Absolutely beautiful opportunity. Really nice there. This is the 4 hour. So maybe on the 1 hour, there was a moving average. which there was. We had the 100 right here. So very simple trade, 38 fib, key level right here, plus the moving average. And I mean, it's already gone on to do how many pips? It's at 980 pips right now. So pretty solid trade from 42.10 to 43. So that was a really obvious trade, both fundamentally and technically. And you're probably thinking, well, Matt, did you take it? No, I haven't been trading very much lately. Just watching the markets, looking for more longer term plays. And gold is a longer term play, but not so much on like a prop firm challenge long term. Thinking long term, like long term investments, long term. So gold, very, very obvious. And same thing with Bitcoin. Bitcoin is back up to $111,000. From a technical perspective, was there anything suggesting, this buy? I said last week, actually, in the live stream, that I think we would get a rally above 100K. Not saying we're going back to all time highs, but you typically see this when any asset is approaching an absolute major level. You think, oh, we're going to bounce from 100K, but there's so many orders placed at 100K, and everybody's thinking that everyone tends to put the orders a little bit higher, and so that's why we rallied at 103.5. So that's not to say that might not happen again. We could have a rally at 102 if it comes back down, but I see this a lot. Even when we were approaching 120, we dropped. I think Bitcoin went to like 118 before it hit 120. Don't quote me on that. But all of the levels of the all-time highs, that psychological level, there was a tendency to drop, for price to drop before it actually hit that level because of where people are putting their orders. So in terms of actually having a support level here, nothing that I see on the 4 hour. But if we're looking at shorts, short-term shorts, you could see here this fib was respected to 38, extend it down. So we're approaching this 38 level here, 112.3, and then 115 could be really interesting if we do rally back up to 115. That could be an interesting area where there could be some short sellers there. So all that to say, Bitcoin, nice little rally over the last couple of days. Franklin, you'll take gold over Bitcoin anytime. No, man. Bitcoin is so much better than gold. But I'd be curious how much time you've spent reading about Bitcoin. Maybe, you know it very well and you don't like it. Or maybe it's boomer vibes, and you just prefer gold. But both of them have done really, really well this year. So that is what's going on with Bitcoin. We did take a look at gold. We took a look at the S&P. Let's see what else is going on. So yeah, we looked at Bitcoin, 8% fall last week. So we are rallying up again. October is here. If you guys are looking to take a prop firm challenge, I've got to mention it, Lark Funding. We have the last 10% off discount of 2025. The code is October 10, works on all programs, 1, 2, 3 step and instant. So if you guys are looking to take a prop firm challenge, hopefully we can be the go-to for you. So in terms of coming up with your macro idea of what's going on in the economy, what's going on in the world, whether it's for trades, investing, you really have to look at all these different factors, bring them together, and that's what's going to help you come up with your thesis. And so this one went really viral last week, where without data centers, GDP growth was 0.1% in the first half of 2025 per Harvard, which is huge, right? That is, at the Fed, they want to see all sectors growing steadily, smoothly. Everything looks nice and clean. That's what the Fed wants to see. This is the opposite of that. There is a stat too of, if you remove like the top 5 companies in the S&P 500 in terms of growth, it's been flat to negative. So the entire economy right now is being propped up by just a handful of factors, a handful of companies, Nvidia being a great example, data centers being another one. So if we have any slowdown, anything in terms of AI, data centers, they're essentially acting as a band-aid on the entire economy right now. And that's not very good. So for me, I want to keep an extra close eye on all earnings from companies that are related to AI because of this. So this is not exactly what the Fed wants to see. And that could lead to more aggressive rate cuts. I mean, rate cuts are already baked in, like they're on trending. When will the government shutdown end? Probably never. 25% basis point cut in October, 96% chance, $101 million in volume. It's baked in. It's going to happen. It's not a matter of, ooh, how much is it going to cut? No, it's going to cut 25 basis points. And then I think if we search here, Fed decision in December, 83% chance of another cut. So everything is already baked in. So this rally that we've seen in stocks going back up to all-time highs, it's not financial advice, but I think it's going to be a classic buy the rumor, sell the news, right? Everyone's already front running what's going to happen, which is it's baked in. It's already baked in, which is really, really interesting. Just like Mamdani becoming the next mayor of New York City, which is wild. So back to the GDP report. Again, strip that out, growth would have been a microscopic 0.1%. Without AI, the US economy is basically a meme stock held up by hopium. So what's happening? Big tech hyperscalers like Microsoft, Amazon, and NVIDIA's partners are building AI and cloud infrastructure like it's the new railroads. Housing, manufacturing, and consumer spending barely moving. High borrowing costs, rates are still high, and weak global demand are choking the real economy. In short, the economy is being carried by one sweaty AI arm. Okay, so if AI capex slows, GDP growth falls off a cliff. The Fed loves broad-based growth. That's what I said, right? So momentum traders. So you can ride tech all the way. Data center names: NVIDIA, SMCI, AMD, Palantir. Macro traders, watch for that rotation, and we'll be considering this in all of our long-term buys moving forward. If we pull up NVIDIA, NVIDIA today is flat, but year to date is still 32%. 1 year, 27%. So, I mean, look at this chart. And the fact that the market cap is 4.4 trillion said, oh my gosh. Yeah. Even if they double over the next 5 years, 10 years, right? Which would be an absolute perfect scenario. They would need to execute literally perfectly. Even if they double their market cap, which is hard to in 5 years, that's relying on perfect execution. There's so many better opportunities out there. What's AMD doing? AMD is up a bit more today. Year to date, 98%. My gosh, imagine just doubling your money in, what are we, October? 10 months. That's pretty juicy. That's pretty nice. I like Coinbase, which I mentioned. I really like UNH, which I've mentioned in the Pip Munch email for 6 months now. I was mentioning it. This is my claim to fame. I was mentioning it before Buffett bought. But of course, Buffett bought and I did not buy because I was still researching. I was still looking. Year to date, it's still down 30%. So that one's unfortunate. The only stock that I'm watching right now as well is Estee Lauder, which Michael Burry had bought, which does, 40% year to date. That's crazy. But if you look at 5 years, it's down big time. And if you look at the max, it was a really nice stock all the way up at 334. So it's the lipstick theory, which is that Estee Lauder and makeup companies, they do really well during times of recession, when the market's not doing well, when people are tightening their wallets because you no longer have money to go on these nice vacations. Instead, you buy smaller things to treat yourself, like lipstick, to make yourself feel good. And so typically Estee Lauder will do really, really well in a recession. It's hard to see the chart here. I mean, it still dropped in 2008, but then it had a nice rally. So interesting stock here. I have to do more research, small dividend yield, but that's kind of the only stock that I'm watching right now. Let me take a look at the chat here. Okay, so Franklin, any insight of what Lark One Phase Challenge is going to be during Lark 3.0? Yes, I'll tell you exactly what it's going to be. It's going to be amazing. It's going to be very good. It's going to be, we're bringing a handful of features that nobody else in the industry has. Again, I can't, leak all of the secrets just yet. It's going to be a handful of features that nobody has, and then 2 out of that 4 to 5-ish will be huge. We're shifting towards a firm that wants to work with traders who want to build a career. So I just kept asking myself, how can we be different? What is it that I needed when I was trying to quit my job and trade full time in 2020, 2021? And the answer to that is what we're bringing. So again, if you're thinking about taking a challenge, um, the prices are going up significantly because of the new features that we're bringing. So it's not just like some people left comments in the YouTube video being like, this guy's full of it of just like increasing prices for no reason. I literally said, and we got some emails too. I literally said, we're raising the prices because we're raising the value. And then they were like, well, you didn't tell me what the value is going to be. Yes, because I said, we're not releasing it yet. So we're not raising the prices just for the sake of raising the prices. We're raising the value way more than we're raising the prices. So if you do want to take a challenge, but you want to save some money, don't wait. But I think it's going to be very good. It's not going to be for everybody, which I've said before. It's really just for traders that want to build a career. And I guess since you're watching, I really appreciate you guys watching and engaging and whatnot. I really like doing these live streams. So the only hint that I will give you is, wouldn't it be really nice to earn a trading salary even on months when you didn't make money? And I'm just going to leave it at that. All right. I'm just going to leave it at that. I think that would be really nice. So that is what's going on there. Ashley, what should we be looking at if we trade indices? So again, it's really about everything that I've covered of what is happening in the world, how's the economy looking, what's the Fed doing, because if you're looking at indices and not individual stocks, it's really risk sentiment. That's all it comes down to. Are we risk on or are we risk off? How are people feeling? If we think we're risk on, then indices are going to do well. So look at those really major key levels, especially on indices, those psychological levels. But it really just comes down to your fundamental idea of what you think risk sentiment is. I would like to turn this into a career, but don't know where to go. Help nurture. Yeah, I mean, stay tuned for what's coming on November 3rd. However, since you guys are here, I'll also mention there's an unfortunate chance that the November 3rd launch will be pushed by a couple of weeks. I know, I'm heartbroken as well. It's because the tech that we're building out, our tech team said that they need more time than they originally anticipated. So I'll know today for sure if it is delayed, and then we'll make all sorts of announcements and whatnot, but only by a couple of weeks. So yeah, hopefully not too bad. Ashley, definitely check out the course again. So I want to go back to, again, I'm gonna see what else is going on. If you guys have questions, drop them in the chat, and then I'll come back and we can take a look at that. So what stocks have been moving aside from the ones that we've already looked at? Lululemon, Canadian company. Yeah, Canadian company for sure, Vancouver. They have been getting absolutely destroyed. So I mention it because they just hit a 5.5 year low. Their PE ratio is now 11.3. I mean, but you have to think, like, this is sort of like a cultural change of people don't want to wear, pants made out of oil anymore for 130 bucks. So if we take a look at the stock, let me pull it up here. It's up 3.8% today, but year to date down 53%. And this was a nice company to invest in earlier on in its rise. Kind of capped at 2013, 2016, and then huge rise right before and during COVID. But it's not doing well. So again, if you're looking for stocks that are interesting that maybe you want to invest in or whatnot, that's why I share these. So it could be interesting. It's not something I'm buying. I personally don't like the company, but it's an interesting one for sure. Oracle tanked 7% on Friday after investors started questioning whether their AI dreams are a little bit too dreamy. This one's crazy, where they said next year they're going to make $3 billion in revenue from AI, and by 2030 it's going to be 20 billion. The fact that investors believe and put money on these projections that are 5 years out, dude, you don't even know what the company is going to be doing 3 months from now. You don't even know what they're going to be doing by the end of the year. So to say, oh, by 2030, I'm going to own 6 Ferraris, 4 Lamborghinis, and I'm going to be a trillionaire, right? It's just, so it's good that the market had a little bit of, a realization that, hey, maybe let's not get too optimistic on this. Sugar prices just hit their lowest close since April 2021. I have no idea. But if we pull up this chart, it's just kind of interesting. It's just sort of cool to take a look at. That's the sugar chart right there. Um, I don't know why it's dropping so much. It's insane. So just kind of an interesting thing. And then the same with orange juice, OJ prices sitting at its lowest level in 3+ years. We've got this guy here. So it's just random. I don't know who's actually trading these, but it's kind of just cool to be like good conversation starter. If you're sitting on the bus stop, say, hey, did you know orange juice prices are the lowest in 3 years? Could be a good conversation starter. Trading success, couple of FTMO payouts here. Always love to share that. Russia and Elon Musk building a tunnel together. This one's wild. Breaking. Russia has reportedly asked Elon Musk to help build a $65 billion undersea rail tunnel linking Russia and Alaska. The tunnel would be named the Putin-Trump Tunnel. I don't know what this would be for. I mean, maybe Putin didn't get the memo that Russia doesn't own Alaska anymore. But I mean, 1.2 million views, pretty just interesting. I don't know what's going on with that, but thought I would share that. These universities have produced the most billionaires. Let's take a look at this one. Harvard, 104 billionaires. Stanford, 69. UPenn, 38. Wow. University of Mumbai, 22. And then we got a couple from China. I'm not going to try and say that word, embarrass myself. So that is not surprising, but interesting. Take a look at this one. The searches for Bitcoin, or searches for, buy Bitcoin, are low. Searches for buy Bitcoin have not reached the highs of 2017 and 2021. Has the bull market even started? This is an interesting sort of variable that a lot of people in the crypto world follow, of how much retail interest is there. I mean, you can maybe say, hey, people aren't using Google searches as much because of AI, but this is just an interesting one to sort of pay attention to over time. So that is everything in the Pip Munch email. You guys have to be subscribed. It's completely free. pipmunch.com. Let me take a look at the chat. No questions there. If you guys do have any questions, let me know. I don't know if we have that much more to go over. If I pull up again the charts, I don't think we have anything crazy going on here. That's Bitcoin. We looked at gold, pound yen, a little bit of choppy sort of wedge. This isn't drawn properly, but there we go. Sort of wedge triangle consolidation. S&P still up. Let me see what's going on Twitter, if we have any Twitter drama, because that's always a good time. No kings. No kings. Some of the videos I saw this weekend were just insane. But don't you think that if Trump was a king, the no kings protest wouldn't be allowed to happen? I'm just going to say that. Let's see what's going on here. U.S. credit spreads dropped to lowest since 1998. Okay. What else do we have? The U.S. debt crisis is intensifying. That's not a shocker to anybody. The total U.S. GDP reached a record $98.8 trillion. Oh, my goodness. Yeah. Ray Dalio, Balaji, they've been screaming for the mountaintops. It's a problem. Israel-Hamas ceasefire collapses. Yeah, that's really unfortunate. I don't think that many people are surprised, but it's really unfortunate that they made, this huge announcement, all this news about, ceasefire. People moved back into Gaza. So really unfortunate that peace is not being upheld. Strategy has acquired. Michael Saylor is back at 168 Bitcoin for $18.8 million. Small purchase for him, 112 per Bitcoin. So he didn't get in at a very good price there. Coffee prices are ripping. No. Oh, no. Coffee prices. Please don't do this. This is heartbreaking, guys. I got to end the stream. This is no good. Just need to figure out how to use eggs to make coffee now. Back to using instant coffee. No, you can't be drinking instant coffee. Yeah, when I was a barista when I was trading and trying to quit my job from being a barista to trade full time. So definitely don't drink instant coffee. What else do we have going on here? It's not gambling, it's high risk investing. That's funny. I'm going to share that in the Pip Munch email tomorrow. That's really good. Gold now accounts for over 20% of global central bank reserves. the highest share we've seen in nearly 3 decades. Interesting. Yeah, we moved off the gold standard in 1971, Richard Nixon, I believe. Which I mean, in hindsight, that's really going to be the downfall of the U.S. of getting off the hard money. So, U.S. federal deficit, yeah. So deficit, all that stuff. There's been so much. Well, actually, hold on. This is a different. This is received the largest payout in Fundnext history within 4 hours, $146,000. This guy's saying obvious paid advertisement. The thing about Payout Junction, if you guys don't know Payout Junction is this website that tracks the wallets of different um, different prop firms. The problem with this, I'm not. It serves a purpose. I mean, total payouts, funding payouts, $164 million. Come on, that's insane. Oh my gosh! And you're saying, oh, I can't make 100K a year from trading, dude. They've processed $164 million in payouts. It's crazy. FTMO is not on this. Um, my point is, you have to be careful with sites like this. And unfortunately, we saw, I'm not going to name names. I don't like naming names, but some of the firms that closed in 2024, one specifically, was sued by their tech provider for faking payouts. And one thing that you can do, which I've seen firms do, is they just send money back and forth between themselves from their Rise wallet, so it looks like a transaction. It was, oh, we just processed 50K in payouts today alone, but you just sent it from yourself to yourself. You just have to be a little bit careful. But nonetheless, $164 million in total payouts, funny pips, incredible. So that's kind of fun to keep an eye on. Black screen. Black screen. No. Can you guys see the screen now? 10:31. That was. Oh no. You can't see the screen? No. Black screen. Skiller was here. Yeah. Please, the screen is not visible. Matt, you remember me? I don't know your name, dude. So it's hard. It's back now. Ooh, okay. Super. Yeah, I really like doing these live streams, but I feel like I need to get like a better setup. I'm just on like a MacBook Air that's a few years old. Okay, it's good. Perfect. So hopefully it's not like too laggy for you guys. I know sometimes that black screen it takes a minute. So all that to say, yeah, payout junction here. Be a little bit careful with those payouts. $164 million by Funding Pips is insane. So, yeah, 9 viewers. I appreciate you guys being here. I did post a video today on my reaction to Lambo Raul. I don't know how you say his name. So if you guys are looking for another video, you could check that out. I have an FTMO hidden rule video coming out this week, which should be interesting. That should be interesting. So that's everything that I wanted to cover today in terms of the charts, in terms of the market, what's going on. We can do another one tomorrow. Again, we're sort of in this wait and see approach. The market needs more data. The market's not quite sure if the economy is, going to crack or if AI is going to push us all the way through. So if you guys are here, I really, really appreciate you. Kaz, I really appreciate that comment. It keeps me making these videos. So I really appreciate it. 8 people is enough for me to, feel motivated and to keep doing this. So same time tomorrow, maybe a little bit earlier tomorrow. I'll schedule it. Come with your questions, trading questions, market questions, prop firm questions. I'll do everything I can to help you guys. But I appreciate it wherever you are. Have a great, great day, whether it's morning, evening, afternoon, doesn't matter. Have a great day, and I'll catch you guys tomorrow. Peace.